Hello, Matthew Copley here with Copley Financial Group, and today we're going to do a market update. We're going to cover a little bit about what's going on in the economy, some of the data that we're seeing. We're going to talk about actual products that are available now, current interest rates, the buffered index. We're also going to talk about a new video series we're going to start next year, starting in January, where we're going to talk about actual investment products, actual investment ideas that we hope will be beneficial to all of our clients and something they might be able to share with friends and family. First, I'd like to say Merry Christmas and Happy Holidays to everyone. We're very, very grateful to have your business. And I feel like all of you have become family to us as far as all of our clients and trying to help you as best we can navigate your finances. So anything we can do to improve your experience with our company, we are very grateful working with you, and we would be grateful for you to reach out to us and let us know if there's some way that we can improve our business for you. So as far as personal holidays for me, we have an exciting trip for our family this year. In fact, I'm going to be gone December the 20th to January the 5th. We are having a lot of people in place while I'm gone to be able to handle all of our clients and anything that's needed at the end of the year. But I am taking off for the holidays. Normally, I have a big Christmas dinner at my house every year, whether it's my sister's family or my wife's sister's family or her parents or my parents, and between cousins and uncles and everyone else that comes, we're in a position where we typically have a pretty big party at our house, 20 or 30 people. This year, there's no party, there's no Christmas lights, there's no Christmas tree, there's no presents, nothing this year, because we're actually taking off for Tahiti. So this has been a trip I've talked about for years. I've always wanted to go. I've read all the books when I was a kid about the South Pacific, and so it's always been a place that has been on my list to go see. So we're actually going to be leaving on December the 20th, which is a Friday. And we're going to be flying right when the kids get out of school that day. We're taking a red-eye flight to Tahiti, and we're going to be spending 2 weeks in Tahiti going around all of the French Polynesian islands. So Tahiti and Bora Bora and Moorea and all those islands there. And we actually fly back the day before all the kids go back to school. So the whole family is going to be there. Even my son, who's at Ohio State University, he's flown back now for the holidays, and he's going to join us. And so we're all going to go as a family. So the kids' presents this year is a trip to Tahiti. So that's what we're doing personally. So I hope everyone else is going to have a great holiday. I know that I will. First, let's talk about some of the economic data that we're seeing. Not a whole lot has changed, although recently we got some data on inflation, which is coming in much hotter than analysts had expected. The producer price index, or the PPI, has come in a lot hotter than expected. And we're seeing a lot of data that's showing that the Fed may not be lowering interest rates much more. They signal that they're going to go another quarter point this month, and I believe that's probably true. And then after that, all bets are off. I think that some of this inflation data is going to give the Fed pause to lower rates any further. This obviously will create some potential issues with the economy, new administration coming in, and everyone thinks that Trump is going to be really great for the economy, and there's this Doge and all of these things. A lot of this is just pure speculation. Of course, there's a lot of other people on the other side that thinks he's going to be horrible for the economy and do horrible things. All of this is speculation. So I encourage everyone to set their political beliefs and political ideas aside, and really let's see what actually comes out of some of these changes that are anticipated, whether it's the tariffs or removing illegal immigrants from the country. Let's really look at what actually comes out of this. And what I've found with Trump, and this is politicians in general, is they make a lot of promises and they talk big, and then ultimately what comes out at the end is much, much smaller. So let's find out what this looks like. I know this has been a tactic for Trump with his business dealings for years, is to negotiate from a point where you ask for way more than you expect and then negotiate down from there. And so let's actually make adjustments to the investments and the portfolio is based on what actually comes out. However, with a lot of this data that we're seeing, some of the employment data, some of the inflation data, which is giving everyone a cause for concern, let's just be defensive. And that's what we've done. A lot of the investments we currently are in, we've taken a much more defensive approach. We've had some great returns over the last year on all of our investment accounts. So let's not give it back. And so we're being very cautious right now. We love, of course, the buffered index. We love the guaranteed interest rates that we're seeing. And so we're going to continue to focus on those areas. So let's talk about those interest rates and that buffered index. We just got word that the interest rates are actually increasing. So this is great news. The 5.25% that we had for interest rates for 3 years and 5 years is increasing to 5.5%, 5.5%. Again, it's the same deduction if you want to have liquidity. And so it's 15 basis point reduction if you want to have a 10% annual liquidity feature on your account. So in the event that you do that, it's going to go from 5.5% down to 5.35%. And so pretty good, even with the liquidity feature on there to allow you to access some of your money, being able to put your money away for 3 years or 5 years at a guaranteed 5.35%. Makes it so the stock investments and other things that we see are not as attractive, because if you can get guaranteed can't lose interest at that level, you have to get a much, much higher interest rate on the stocks in order to justify that. And taking a lot of risk at this point when you have current valuations in the stock market, we're trading at a very high PE multiple. The CAPE ratio is really high. So looking at these numbers, I think it's important to be more cautious. And of course, the buffered index portfolio is one way that we can invest in the stock market and have some great insurance. And so I'll tell you the current numbers that we just got that are available now. We now have a 2-year buffered index available. It's on the S&P 500. And this one, we've changed it a little bit from what we've done in the past. We actually increased the cap rate and reduced the insurance just a little bit in order to get the best pricing in the secondary market. So the current cap rate is going to be 22%. That means that if you put your money in this investment, you can make up to 22% over the next 2 years. If the stock market's up 15, you're up 15. If it's up 20, you're up 20. If it's up 30%, you're up 22%. So you're agreeing to give up everything above 22%. In exchange, we're able to buy a dual directional insurance policy down to 15%. So in the event that the stock market drops, say it's down 10%, not only do you not lose, you actually make 10%. If the market's down 14%, not only do you not lose any money, but you make 14%. You make the inverse return all the way down to 15%. If the stock market was down more than 15%, you would get a full 15% reimbursement. So if the stock market was, say, down 25%, you would get reimbursed 15, you would still be down 10%. So there is some risk on this, but it is a way that we can invest in the S&P 500 and have that insurance, which I think is important. The idea is what if the stock market is down 25%? Well, if the market's down 25% and all your friends and neighbors and family are all down 25% and you get reimbursed 15% of that loss and you're only down 10, great time to invest in the stock market while it's low. So it really gives you that protection that we're looking for. And the upside, of course, is great, a 22% cap. If the stock market was up 15 or 20% over the next 2 years, that would allow you to have a full gain in that account with the full market going up to 15 or 22%. So looking at those numbers, I think this is a really, really great product. In fact, I think it's better now than maybe even it was in the last few years as we did these, and it's turned out to create some great results. But in this market where we're not quite sure about what's going to happen, everyone thinks that there's going to be this great economy with Trump and all this government efficiency and the whole bit, and maybe that'll happen, and maybe the cap rates will get hit and we'll make 22%. And even if the market's up 30% and you're only up 22, you're not going to be unhappy. But what if it doesn't work out as everyone thinks? I know the market's been going up and there's a lot of excitement with the economy and stocks, but what if it doesn't work out? What if some of this economic data turns out to be a lot worse than projected and estimated, and all of a sudden the market comes down? Having this insurance is going to be extremely, extremely valuable. And in addition to that, of course, we're going to continue to focus on good inflation hedges, value stocks, dividend stocks, companies that are going to perform well in any economic environment. So lastly, I'd like to cover our new video series we are planning to start next year. We want to do a couple of videos every single month in addition to our market update on specific things that will potentially help you, whether it's maximizing income in retirement or minimizing taxes or taking your Social Security the right way, or any loopholes or different tips or tricks or strategies or things that we have found that are helpful for people in retirement. We're going to share those on an individual specific basis, and our hope is these videos that we send out, this series, will be something that you tune into, you share with family and friends, things that can help people throughout their retirement. So look out for that. It's coming. We're excited about it. Also, just wanted to recap, I am going to be out of the office for a couple weeks over the holidays, and so we have a great staff here. Just email support@copleyfg.com. If you need anything, you can simply call the office as well. We have our administrative staff and financial advisors that will be on staff the whole time, so you will be well taken care of while I am out of the office. So I hope everyone here has a Merry Christmas and a Happy Holiday, and I look forward to seeing you in our office sometime over the course of the next year.